Hello, it is the 8th of May, 2011, and welcome to today's Silver Log, going through some analysis on the market, going through the volatility, the manipulation within the market, and a bunch of other different topics. We'll start off within the daily chart, and the volume represents that of the iShares or the SLV. And in November, it made a exceptionally high move of roughly about 160 million shares, and well, it's now doubled that, at least as of the last Thursday session. Volume cooled down, but overall it was still much higher than it had previously had, and this volume was much higher than it occurred in 2008, 2007, and so on and so on. Then again, we have an increase of volatility and a massive increase. If you look at how much silver is mined, which is about 2/3 of a billion ounces a year, it really puts things into perspective to what's going on and how much this selling market is influenced by people with paper contracts and for the most part have no want to actually take delivery of their silver or actually even send their silver for money. Either way, and I shouldn't say money, I should say fiat money or fiat currency. Regardless, this is all a bunch of BS as far as the tangible metal is concerned. I find it very interesting why people are selling bullion when the bullion market really doesn't change based on margin. I'll get more into that later on. As far as the charts are concerned, the markets came down to this 38.2% Fibonacci level at $33.58. This is exponential based on the $17.74 breakout low in August and this high of $49.81. It's also at the area of this volume weighted average price going back to August, and because the volume is increasing hard, this line is also increasing higher as well. This means that the average person trading SLV shares since the August breakout is pretty much at an even position. Of course, if you're buying this within the physical, the average, if you bought every single day since August the 25th, you'd be in a winning position by playing the bullion because you're not playing the volume whatsoever. Now, when you're at an area for support that's supposed to be, and it doesn't occur, then oftentimes you get a really fast move because it's a failure. Just as 39 was supposed to be big support, that didn't happen, and that was a failure. Fast move back down here. Again, if this is a failure again, another fast move back down to the 200-day moving average, and again to this 2621 level, which is a significant Fibonacci mark. And if you're trading on this in any form, it doesn't matter if you're playing within the margin, it doesn't matter if it's AGQ shares, SLV, puts, calls, SLW, it doesn't matter. If you can see a significant loss occur like this, the secret is being able to laugh your losses away. Because if you're not, then the risk versus reward assessments are almost a Russian roulette category. Because when you're playing this game, it's a casino. I've said that for years. And when you are gambling, it's good to understand your risk factor. If you can go to the Bellagio and you bring 5,000, you don't care what happens if you lose, you have a good time, so be it, ha ha ha. The same methodology should be the case here. You put whatever down, whatever fiat money down, the market takes you down. If you can't laugh it off, then you're playing Russian roulette. So before making any wager, do some homework, go through the risk cycles, the reward cycles, go through every single factor that you can think of that goes within your strategy or within your wager. All right, moving on now to the weekly candle. I find it interesting how I've yet to see anybody talk about this methodology other than myself, especially because it's been working so amazing, which is the Fibonacci upside from the $4 lows, which is the bottom of this red line, and these $8 highs. I've talked about what happened in here. I'm not going to say it again. Instead, I'm just going to talk about what's going on now. After the $31.42 mark was hit at the end of 2010, it had a very small correction, fast move up towards here, perfect resistance again, and it's very common that future resistance becomes support. When that's the case, the market is still in a bullish trend. Most likely, we're going to come back down to this 31 level. It may have a little bit of a bounce before doing so, and it can just keep going lower. And at the same point, because it's the paper game, that doesn't mean that we're going to have to find support in here. But the larger the market goes to the downside, the larger the physical disconnect's going to be. And we'll just have to wait and see how much lower it's going to go. Because I'd like to say they really can't do much more, but if they got all of the fiat money, if they are controlling the system as they are, then they can essentially do pretty much whatever it is they want. Now, as far as trends are concerned, this is the reverse chart of the silver market. I like to do this now and again because it gives you a different perspective to the exact same chart. You might miss a few things and pick it up on here. However, if you think that this big move up is the bottom, it might be, but I would count on it not to be the case. And is it manipulation? Well, let's just take a look at what manipulation is. Manipulation is defined as shrewd or devious management. Shrewd is defined as disposed to artful and cunning practices, aka being tricky. Devious is defined as not being straightforward, aka shifty. Margin means borrowed money that is used to purchase securities. This practice is referred to as buying on margin. Now, there's some homework questions, and we'll go over them in just a little bit. You don't have to do them, but if you want to answer them, you can go right ahead. Let's take a look at what's going on within the market. We have the margin rate increases, people buying on margins. So apparently, if it's not manipulation, it's really, really straightforward. There is nobody selling physical bullion on this because they are straightforwardly knowing what's going on. None of these practices were tricky, or there's nothing that was cunning practices. But let's take a look at the whole system of fiat money, because that's what it all comes down to. The fact of the matter is the silver market is going down because of financial instruments within the fiat currency. It has nothing to do within the real physical metal. You've watched movies like, say, Zeitgeist, Federal Reserve, and I've talked about this for so long. It's a debt explosion that we're going through. So what would you expect when you're having debt issues bringing the price down? And because this is all set within fiat money, to me, it's 100% certain that the whole system has been manipulation, is currently manipulation, and it's not going to end anytime soon. But once again, we'll get more into that at the very end of this video. So here's some questions. Does the creation of fiat money involve artful and cunning practices? What percentage of American teenagers and adults are aware of fiat? Has the world governments been straightforward with how money is created? Now, if all of these answers, if this answer is no, if this answer is 100%, and if this answer is yes, then there is no manipulation going on. What examples are there of bankers using shrewd management? If you have a hard time finding any answers, once again, it's probably not manipulated. What examples are there of governments using devious management? Same thing again. If you have a hard time finding answers, then most likely it's not manipulated. Do bankers and or governments explain to the masses that debt is guaranteed? If that's a question, there should be a question mark in here. If that's the situation and the answer is yes, no bubble again. How will a debt and dollar bubble play out? And finally, raising margin would be A, shrewd, B, devious, C, both shrewd and devious, or D, neither. If you don't think it's manipulation, then your answer is D. Alrighty, now let's talk about some volatility. I've been talking quite a bit about it, and for good reason, because I've been expecting this to happen, and we're still nowhere near where I'm expecting. The levels on the top represent the percentage moves on a daily basis from the highest point to the lowest point. And when we had these 14% moves in an hour, that was bigger than any day that the market has had going back to 2009, early on. There's no dates on the bottom with the exception of this 2010. But what's important is the pattern below and what's going on in here. The pattern below, like any other stock, shows stage 4 decline. Markets are in 4 stages. Stage 1, you go sideways. Stage 2, you're in a bull market. Stage 3, you correct like this. And stage 4, you go lower. So therefore, this was a stage 4 decline. Then you stage 1 consolidation, looking to move into a stage 2 going higher, or that of higher volatility. The way these numbers are calculated is by taking the source number above, taking the average of the last 30 and 120 days, adding those two numbers together and multiplying it by 1,000. Basically, I guess you can I should be multiplying it by 500, just because I can get better percentage moves. It means that if it's at 80, the average percentage move per day is 4%, basically. That's why I should do it by 50, then this number would be 40. However, it is what it is. Now, as far as the gold within silver, I can do the same calculations with gold as far as its volatility, and then divide the silver number by the gold number. What this tells me is how much more volatile silver is over gold. And throughout the earlier parts, March of 09, all through 09 into 2010, it stayed between 1.5 and 2 times higher. If it's at 1, that means they are exactly as volatile. So normally silver has been about 1 3/4 times more volatile. That means if silver goes up 1.75%, gold should go up 1. If silver goes down 1.75, then gold should go down 1. But that's changing. Broke out this resistance here at the end of 2010 and into 2011 now, and now it's 3 times greater. So on a 3% down day for silver is like a 1% down day for gold. Right now it's obviously higher lately. This is using an average base only. As far as what's been going on recently, this was really high volume at one point. And then I was talking about before with low volume that would give you the benefit of the doubt towards the buyers on low volume, which was the case. The market went up during this time frame. And with here, we see that it had an explosion of volume, having higher highs than it did in here, breaking this resistance, and right in here. Now this is 14%, but I've scaled this down so we can take a look better at what's been going on here. And every move is like 1, 2, 3, 4% for 60 minutes of trading, which really is ludicrous. It's outstanding how much this happens. When we were low volatile movements, it was very rare to have a percentage move of over 1. And there was, from this point here to this point here, there was not a single 2% move top to bottom. And how many has there been since? Yeah, a lot. And as far as the same chart's concerned, again here, using the same calculations on the shorter term time frame, silver has been about 4 times more volatile than gold lately. Now we're going to talk about the gold to silver ratio. I've been very often asked, should I be selling my silver, or excuse me, should I be selling my gold for silver? And it was really tough to answer that question in here because, one, it's kind of up a lot, and I really hate selling when markets have been capitulating for quite some time. The only problem by doing that is if they don't wear you out, they scare you out. But at the same point, I realize that long term, this is going much higher, or for the ratio, going much lower. At least the odds state to be the case. Historic ratio, 15 or 16:1. And even based on that, I think that it's going to go much lower. However, if you've ever been looking for any time to trade your gold for silver, if I had a bunch and I don't, this is when I would do it. And the reason why I don't get into gold is because it seems fairly obvious to me that silver is going to outperform gold, and I can handle the roller coaster that silver has. Okay, I'm just going to go over some of my notes because, well, if I don't, then you're not going to know what I'm talking about all the way. As the market was going higher, one of the words that I was talking about was how resilient the market was. Now, resilient means how outstanding you are able to recover from something. Now, the recovery was from all of this. That's what's been resilient. Now, on the shorter term time frame, if I ever use the resilient term, it's going to be from recovering from what has happened over the last week. So it's more often than not, or most likely, I will not be using that term. Now, as far as what was stating, okay, it was paper that brought this market higher. Yes, it was, and it's paper that's brought this lower. But it's also paper that's done this, done this, done this, done this, and so on. And earlier this month, or just a few weeks ago maybe, Ben Bernanke said that the reason for inflation was gold and silver prices going higher. So if he's correct, and we'll assume in this argument that he is, at least for the time being, then the prices of silver and gold going lower in here would have brought deflation. So did we see home prices go down 30%? Did we see the price of cars go down 30%? Your pay go down 30%? No, no, no. It was lower. Or so excuse me, they were higher all the prices, but silver and gold went lower. So that is not a good example to use. Because if it was based on gold and silver prices, then the prices of everything else would have deflated from 1990 down towards here. When you go from $50 per ounce down to about $3.50 in 13 years, that's a loss of over 90%. Gold went from 800 down to about 250, or a loss of about 2/3. So did every product go down 2/3 during that time point? No. When Mike Maloney was stating that the reason why he wants to, and well, I want to get into the physical metal is because it has been manipulated. All this stuff has went on. What was the fair value in here? That's another subject, but it's actually kind of worth it. But at the same point, when you use inflation, the rate of ascent has to be some uptrend line like this because of the fact within the inflationary values. The system's collapsing. The entire fiat system is collapsing. And as long as people are trading bullion within this price, then yes, that will stall things a little bit, but going below here will cause a disconnect, and I don't want to say the same things over and over again, but the currency is dying. The fiat currency is dead. So if you're telling me that silver is going down because of inventory issues, because it's up too much, that's fine. But I want to know that silver is going to get beaten by many different asset classes. I'm on here stating that 80-90% of the asset classes will not do as well as silver. I'm talking real physical assets. And a lot of it is because of this. Look at almost any stock, at least index, any commodity, and notice that all of them have highs in this period that are much lower than the current ones. That's not the case here. Again, another reason why I'm looking to get into this metal. And if there's a bubble in here, a bubble means that we will not see this level for quite some time, sort of like in here. Maybe we come down and test a lower high, and well, now we're down in the races, and we really got to go below $8.46, or maybe correct through time for about 5, 6, 7 years. Only problem is that would be betting against the Mayan calendar. If you choose to do so, well, then that's fine. But I don't even know when this thing ends. If it ends this year, the explosion is this year. If it ends in 2012 or 2013, then very often, yes, you can get these types of moves that may take a while to happen. But until I know better, as far as the time is concerned, I'm going to have to go with what the best odds state, and right now, that is for this year. A couple of shoutouts. BrotherJohnF. I'll put the links down below. He's been making a lot of good videos within the technical analysis, fundamental analysis, and I like how he mixes both the two together. That, to me, I think is a stronger way of making trades. If you only stick with technicals, then you're going to miss a lot of things, and same thing by only going with the fundamentals. Another one is JSNIP4, JSNIP4. He does Realist news, and he was stating on the weekend that he was calling APMEX, and this was at 4 o'clock Eastern time on Friday. And when you have this happening and everyone's there is busy taking orders, then are people shaken out and scared to get into silver? Because if you've been wanting to get into silver and you haven't yet, maybe in here you were saying, oh man, it's up too much. I don't know. Well, if that's your case, well, now it's not up as much as it was before. If you're looking to get into it, you got somewhat of a retracement to start right now. Okay, the next thing, let me just go through some of the notes because I'm missing a couple other things. Okay, paper silver awareness. I would like to say that the awareness for the Ponzi scheme after what's been going on is actually going to come into play, but then I thought the same thing last year on May the 6th within the flash crash. It all depends, I guess, how fast people are waking up. But I'll switch now to Osama bin Laden. And when he was supposedly killed and then thrown in the sea, well, I'm now starting to see people like I may label as the blue pill stating this is BS. This doesn't make sense. This is total BS. And if that's the case, then that's going to lead to more people researching Osama bin Laden, 911, and if they do that, they're going to find out that the government may not be as nice as they once thought. That would work again towards the awareness factor. Okay, that's about it actually. So thank you for watching this video, and have yourself a great day. Bye-bye.